Hi, believers. This is Amit from the Via team, and I'm here to provide our weekly bite and the road ahead in the markets. Markets largely consolidated during the week amid mixed cues and ended almost unchanged. After a volatile start, benchmark indices remained range bound in the subsequent sessions. The Nifty finally settled, closing flat, while Bank Nifty gained 1.5%. Broader indices moved largely in line with the benchmarks and ended with modest gains, with mid and small caps gaining approximately 1%. Lackluster performance was largely driven by weak domestic market sentiment, largely due to relentless foreign capital outflow, geopolitical uncertainties, and mixed Q3 earnings so far. One good thing was the IT sector outperformance, supported by an upward revision in revenue growth projections from a leading industry bellwether Infosys, coupled with expectations of increased technology spending. Meanwhile, investor focus also shifted to banking counters as early results reflected notable improvements in asset quality and margin profiles, further strengthening sentiment in the sector. On earnings, around 10% of the NSE 500 has reported Q3 FY26 results so far. While PAT growth and margin expansion have been healthy, top line growth remains low at 11%. What we are increasingly observing is that the market performance is increasingly concentrated in a narrow set of winners. Metals, PSU banks, gold financing, auto OEMs and ancillaries, shipping and port related ancillaries are leading returns. Looking into next week, Q3 earnings remain the only key driver. Early trends suggest that 2026 too is shaping up to be a highly selective, bottoms up stock pickers market. Indian markets head into the new week with a cautious but stock specific tone as investors balance domestic earnings cues against global macro and geopolitical developments. A sustained bull market requires high teen growth in both bottom and top line. The next 2 weeks will be critical in determining whether the Q3 FY26 earnings season is a disappointment or not. On the global front, uncertainty around US trade negotiations and the continued 50% tariff on Indian imports remain a headwind for sentiment. However, attention is shifting to the India EU trade agreement, which is expected to be concluded later this month and could act as a meaningful catalyst for improved investor confidence. Meanwhile, US Iran rhetoric continues to act as a short term driver of global market sentiment, influencing oil prices and cross asset positioning. While recent de escalation comments have capped some of the upside in crude, rapidly changing headlines are keeping investors cautious and tactically positioned, with energy and safe haven assets likely to lead any risk on or risk off moves. Technically, the Nifty continues to hover near its medium term moving average, the 100-day moving averages, indicating a tussle between bulls and bears. A decisive break below this level could trigger further downside toward 25,300, followed by the key long term support near the 200-day moving averages at 25,150. On the upside, any rebound is likely to face resistance in the 25,900 to 26,000 zone, with the next hurdle around 26,200. Overall, the near-term outlook remains guarded, with markets expected to be driven by earnings outcomes, global trade signals, and geopolitical developments, favoring selective, stock-specific opportunities over broad directional bets. Investors should be highly selective in building the positions over next few weeks, taking into account results, position, and geopolitical uncertainty. That's all for today. Wishing you a profitable trading week and a very happy new year.